So hello, my dear friends. In this session, we'll try to discuss very important takeaway from this RBI's MPC meeting. This takeaway is going to be very important both for your RBI examination and upcoming NABARD examination too. As you know that MPC, the Monetary Policy Committee, thinks they do ask in the RBI examination, and from here you can get two type of question, both the current, related to the recent decisions that they have taken, or it can be based on the static thing. So static and current, right? Both they can ask you. So we will try to discuss this important thing in a very pointed manner, what they can ask you and what you should know in this session of this 10 minutes. We will also see this regulatory measures, which are very important, which they have announced in this recent MPC, right? We will try to understand also in a very simple terms. That is because these points are very important for your examination. So let's start very fastly about MPC. If you want to study, right, they are certain static things also, as I told you. As you know that before 2016, when the Finance Act 2060 about the MPC's statutory status was not given, so RBI was not that much accountable for controlling the inflation. Now, what they ask is that where this MPC right has been included. So this has been included to give a statutory status in the RBI Act of 1934. It is being defined in the section 2(3)(cc)(1). This is very important, you can remember. And MPC is constituted under Section 45ZB of the RBI Act of 1934. This they have earlier asked in the both NABARD and RBI examination. Apart from that, Section 45ZA that relates to your inflation targeting. Remember one thing is that when we talk about the inflation targeting, what MPC is that it targets medium, right, in a medium term, not for a longer term. So this medium term is for up to 5 years, right? So this is very important, right? Don't miss that. Then if we talk about the section 45ZB, once the monetary policy right committee has ended its meeting, they have to publish a detailed note after 14 days. So this is very important. That is being told in the section 45ZL, right? Now, whatever the decision they takes, basically it falls in this three areas. The one extreme is hawkish, one extreme is accommodative, and the middle one is neutral. Now, what decision they have taken in this meet is neutral. That means that a neutral stance implies that central bank neither seeks to stimulate, that is, it is not going for the growth trajectory or not, it is extremely onto the inflation control side. So that means neutral. If we talk about the hawkish, that I comes, that is the main thing is to control the inflation by controlling the interest rate. Whenever we talks about the accommodative, that means we are talking about the GDP, we are talking about the growth. So more RBI is inclined towards the interest rate, right? Policy rate such that it stimulates growth in the economy, while hawkish, it tries to control inflation in the economy. But presently, the status they have maintained is neutral. Now, this decision they takes on basis on the NSO data, IMF data, services, agriculture, all the things, whatever in the economy, that is important. Now, the minute, these numbers are also important that they ask in the examination. We will see fastly through these numbers. They can ask you both static and the current part from this key policy rates also. Now, what they can ask you that which are the tools by which they takes money, which are the tools by which bank parks the money, arrange them in ascending order, arrange them in descending order. This type of question they can get. So ascending order is your SDF, Repo, and MSF. So these data are very important. The repo rate, SDF, which has been unchanged from the last meet, that is 5.5, 5.75, 5.25. Just go through this. Don't forget that. They can ask you about this also, that which is the most expensive, right, borrowing tool. So MSF is the most expensive one, the borrowing tool for the banks. Like that also you can remember. Inflation outlook and growth outlook. Both they've asked quarter wise also in the IPPS examination. So don't forget to remember the quarter wise values also apart from the financial year 26 values. This is very important. Then is our external sector rupee to make it, to strengthen it, internationalization of the Indian rupee. They are working a lot. That's why also they have brought in this 22 regulatory steps also. The financial steps, the financial stability related data related to GNPA and CRAR is very important because this two data has been discussed in RBI's annual report and annual report of Department of Financial Services. Inflation targeting 4 plus minus 2, and this liquidity and transmission is again very important. You know that there is surplus liquidity of 2.1 lakh crores on daily average basis with the banking system of our country. How this is being transmitted with the help of this monetary policies is very important. So have more transmission. We have loan rates have been reduced since Feb by 58 bps and deposit rates by 106 bps. So the relation between the loan rates and the deposit rates, right, cuts is very important because deposit rates, if the right, there will be no cuts, then the people will be saving their money with the banks only, right? It will go into the saving accounts only. It will not be dispersed. So that's why the loan rates have been gone and deposit rates have also been decreased, so that people take out that money and invest in other places. It helps in the growth of the economy. So this liquidity and transmission is again important. Financial stability values are important. And last but not least, these 22 measures are going to be very, very, very important for your upcoming examination. We'll see in a nutshell that this 22 steps, this falls under this categories. The maximum attention is on seven number of steps, that is seven in ease of doing business and regulatory simplification, five in banking and resilience, two in forex, four in credit and rating, two in consumer protection, two in capital and market exposure. Now, there is a no need to individually read all the 22. Do not try to overtake with the thing. Okay? Read whatever is in the newspapers. Do not try to do MSc, PhD with one particular thing. Just whatever I will show you in chart, just try to remember that question will come from there only. So these are the 22 whatever steps they have told, segregated into different sections. Out of this, you can just remember this only. It will work very well for the upcoming examination. The lending against the share limit has been raised from 20 lakhs to 1 crore. IPO financing limit raised from 10 lakh to 25 lakh per person. Then implementation of expected credit loss from April 2017 following the glide path of till 2021. Then revised Basel norms effective from April 27. And last but not least, INR lending permitted to Indian residents of Nepal, Bhutan, Sri Lanka for trade settlements in INR only, not in the local currency of that economy. That is not a necessity. So this, out of this, these three are very important. You must remember that lending against the share limit, right? Whatever the loan you can take against your shares, against your demat account has been raised from 20 lakhs to 1 crore. So you'll be getting more loan against your shares or the demat, right, account. IPO financing limit has also been raised, right, from your 10 lakh to 25 lakhs. So this is very important. IPO financing limit also has been raised for individual basis from 10 lakh to 25. You can invest more in the IPOs through this lending limit. I told you, you'll get more loans, so you will invest more. So that's why they have introduced this also. Another problem earlier was that since you know that there is surplus liquidity, as I have shown you, 2.1 lakh crore on a daily average basis. So much surplus money is there with the banks. If you put a limit that bank will give this much to the corporate entity, then how this liquidity will be sucked up? So that's why they have told that the corporates earlier, this corporates, those who are very hungry to take the money, but RBI has put a limit that you can get only 10,000 crore only. You can get only 10,000 crore only from a bank. So this limit has been removed. Now you can go to any bank and you can have more than this 10,000 crore rupees. So the hungry corporates now can take more than this. This is the next takeaway of this regulatory measures. The third one is very important, is that the exposure limit, right? The banks have tier one capital. Tier one capital are the highest quality of the capital that bank have. That includes their equity shares, the reserves, all these things. That are their net owned fund, right? So of this, they can lend to a single borrower 20%, and to a group of borrower it is 25%. This 20%, 25% is very important for your examination. This sets the exposure limit for you. This is very, very, very important for your examination. So if you remember this much only, the key takeaways, I have not spent a lot of time because time is precious right now. The key takeaways is very important for your phase one, both of your RBI examination and your NABARD examination. So you can join our to the point Panchsutra program, right? It's a very concise to the point program for your RBI Grade B phase one. And if you're preparing for NABARD, you can join our NABARD course mentorship, in which we are giving one of the highest number of results in India. So that's all, my dear friends. Bye bye. Take care.